We're here with the esteemed CEOs in the industry in one of the hottest summers in Cyprus, and we're going to discuss the hottest topics in the industry. But first, I'll let you guys introduce yourself briefly.
My name is Andrew Ralich. I am the CEO and co-founder of 10 Financial. 10 has been working in the FX, OTC, and exchange-traded markets for nearly a decade. We provide risk management, aggregation, order routing, and infrastructure for brokers, banks, hedge funds, a wide variety of market participants across a 200-client ecosystem today.
Good morning, I'm Matt Maloney. I'm the CEO of CFH Clearing. CFH is a subsidiary of Playtech Group, a UK FTSE 250 listed company with a $3.5 billion balance sheet. We provide liquidity and technology solutions to brokers and professionals worldwide.
Hello, my name is Alexey, and I'm CEO and founder of Tools for Brokers company. My company developed different kind of technical software for forex brokers, banks, and we also provide technical support of these kind of clients. We have clients from more than 30 countries all over the world, and one of the best integrator in this kind of area. So,
yeah. Check. Can you hear me? Okay. Hi, my name is Simon Grunfeld. I'm the founder and CEO of Ibenex Financial Corp. We're a US-based crypto-related business. We provide everything from platform as a service, liquidity, security, custodial services, etc., all catered to the crypto markets.
Hello, my name is Illimar Matus. I'm CFO of Tickmill. Tickmill is serving roughly 30,000 active clients in 180 countries. We are by far one of the brokers that has most sophisticated client base. We provide very low spreads, executably low spreads. We have very fast execution. We are having 3 licenses across the globe, in the process of doing other licenses. We are a very well capitalized company, and it's a pleasure to say that from the client base, again, I think we're serving one of the most sophisticated clients, which means that everybody working with us from the liquidity provider side, from the technology provider side, have from our side very high requirements. And it's a pleasure to be here as well.
Good morning. My name is Avner Ziv, the CEO of ZotaPay. I must say also payments. You have high demands also. ZotaPay is a payment service provider, a gateway payment hub. We are connected with more than 260 acquirers, payment service providers all over the world. So our main idea is we have no competition, only co-opetition. We are connecting to others and promote them with one simple API. With the ZotaPay gateway, you will be able, or merchants will be able to reach any bank, acquirer, APM, alternative payment method, e-wallet, exchange, crypto exchanges worldwide. We are connected to more than 60 different crypto exchanges. Processing today, one of the main or only PSPs that can do payments for ICO, exchanges, and crypto trading. We will find the best bank to place it. And connected also in Southeast Asia, in Malaysia, Indonesia, China, Japan, Russia, South America, this region, the toughest region. And we are trying to go out of Europe, or at least to promote the European banks, which are doing a very good job, but to find the best partners all over the world, it's harder to find them.
All right, so in these days, we are observing a marked shift in the industry with the upcoming ESMA new regulations. And my first question to the panel is, how do you feel that the industry is going to change, and what are the main aspects that of brokerage or a company in the industry shifting its business model in order to adapt to this new regulatory framework and successfully accommodate it and continue operating. Ingmar, why don't you start?
If I look from the brokerage side, then I think I'm one of the most luckiest person in this room because if you look at Tickmill's global business, then we have roughly 80% of our business is outside of Europe. So we are talking about core markets like Southeast Asia, Middle East, Africa, picking up now South America. So I'm lucky because we are somewhat immune to this situation, what is happening with ESMA. And we have specifically targeted this Southeast Asian markets, African markets, and now South America, because it was foreseeable that something will happen in Europe. I think one of the points that like some guys are making that, okay, Australia is still having 1 to 500. So now there is this big push to Australia. I think people are mistaken in that sense that Australia will also follow suit. I mean, it will not happen maybe 6 months from now, 7 months from now, but eventually it will happen. So it is a short-term solution. How we are playing this market is that we are adjusting our whole business model to the situation where there is 150 or 130 leverage across the globe. So we are looking from the cost perspective, from the business partners perspective, we are very, very conservative. And also over the years, we have built a very strong capital base. So what we aim to do in Europe, having also the UKFC license, we want to start grabbing more market share in Europe.
Well, everybody's going to start trying to do that, but few will succeed. CFH has relationships with a number of brokers, so maybe you could elaborate on what you're hearing from them. Right.
So I'm also a lucky guy in the room. CFH is a global business, and actually only a subset of our business is inside Europe, and then only a subset of that is underlying retail clients. What we're tending to see is that some of our broker clients in Europe are opening regulated entities offshore. Others just accept that the changes are going to happen, and there will, at least in the short term, be an impact on the business. Others are looking to potentially upgrade some clients where appropriate to professional status so that they can continue to offer enhanced leverage. We don't anticipate any major impact on our business whatsoever. We've done a lot of analytics on the type of flow and the volume that comes from those underlying clients likely to be affected, and actually it's minimal. We continue to see good growth in the Asian market. We continue to see that we're growing market share in Europe, and as long as we continue to grow faster than other people and the market as a whole, we grow irrespective of market conditions.
All right, and you also work with a lot of brokers at ZotaPay, so what is your impression of what's going on?
I would say first, and it's my own personal opinion, and maybe I'm the only one to think that, regulation and ESMA 2, Basel 2 is a good thing. It's not bad. We don't have to be afraid from regulation, from leveraged services, and so on. This is my personal opinion. The market started as a whole with unregulated. I've been in the Forex more than a decade. There was no license back then. Platform used Saxo Bank license for platform. That was the only license. So today, and we have to bear in mind what happened 3.5 years ago, gigantic companies like Alpari and FXCM disappeared in 15 seconds because of what we are talking now, leveraged, liquidity providers, and how they were exposed with their traders. And bear in mind, they are full STP, straight through processing. They are all highly regulated companies, and because of the external event, some of them billion-dollar companies were vanished in 15 minutes or so on. So the ESMA 2, for me, is not a bad thing. Regulation for brokers, it means for the end users more secure. They will be able to deposit their funds, and the financial world going to be similar. A broker and a bank is going to be more like the same services, same demands, or like a bank, e-bank. So from our side, we understand that the brokers are has to adapt, fast-traded. It will reduce the costs or the margins. On the other hand, we see a lot of traffic going outside of Europe, as mentioned, either in China, Southeast Asia. And if I take the crypto hype that we had in the past year, maybe in the last couple of months, it is not. But when you take the Forex and the cryptocurrency and we merge them in a couple of years from now, there is no leverage. The person wants to trade on Litecoin or Dashcoin or to buy Bitcoin, there is no leverage. He will buy as much as he wants. And I think for the long run, it will make the investors, in the end, the traders, to invest more money, more capital. If they don't have, they will not invest. And that's a good thing from my eyes.
I think if you take the Japanese case, I think we all know that there's very low leverage there. So if you go back and check what happened, so after the reduction in leverage, there was like 90% of the guys, the brokers, left the market. They were not able to cope with that. The remaining 10% of the brokers that were in Japan, they became much, much bigger. So what we will possibly see in the future in Europe is that 2 to 3 years from now, there will be 10 to 20 brokers in Europe, and they will be much bigger than what they are today. So as a trader, as a counterparty in this business, you have to focus already today to check which are the guys that are going to be around 2 to 3 years from now. Are these the guys that have 100,000 share capital today and 500,000 client equity? For sure not. So you have to look at the capital base.
Right. And Andrew, you have something to say on the matter?
Yeah, I thought I was going to be the only person in the room who likes regulation and is excited about it. So there's 2 of us now here who can start a club together, pro-regulation committee. 10 was founded in 2009 in the United States, about 6 months after NFA imposed some of the most restrictive both leverage and net capital requirements across the entire retail industry. When we looked at what that did to the US market and predicted and tried to think about what that would mean globally, it brings volume down, it accelerates consolidation in a fragmented industry, but it provides a foundation and a legitimacy that allows you to build longer term, larger, with businesses with more potential for exit, acquisition, investment than in an unregulated or fly-by-night high leverage market. So we've always seen the inevitability of regulation in markets as something that if brokers properly prepare for, if participants in that space build a business model that doesn't rely on the revenue and profitability acceleration of extreme leverage, you get things like the statistical analysis you mentioned on Japan. We've run the same numbers, we've looked at the same things, and a reduction in leverage does push some clients out of the space, but it extends the life cycle of those clients that maintain. It provides a more consistent revenue curve for brokers who can adapt their model to these new regulations. And with the properly implemented regulation, which I think ESMA is restrictive. It's not as restrictive as what happened in the US. It's not as restrictive as what happened in Japan. I predict ASIC and some other jurisdictions will come in with maybe even more lenient but adjusted capital restrictions and leverage. And those changes are just going to provide a better foundation for clients to have more confidence going into an industry, better advertising standards, better word of mouth about a space that now we can look into the future and say, okay, we're on a foundation that we can build a mansion on here, and we're not working in an industry that's going to constantly struggle with reputation and client cycle concerns.
So, Simon, you're now focused on an industry that is relatively loosely regulated, but do you have any thoughts on the matter?
So I think the biggest challenge, everybody that was here about an hour ago and we saw Chairwoman from CISA give a speech, to the most part, she basically confessed saying, there's a lot of things that are still unknown. It's the unknown unknowns, right? That is the biggest challenge. How do you regulate something that is so fresh, so new? The technology is still trying to be absorbed and discovered by regulators whose background is all economy and legal. So there's a huge challenge there. In the U.S., I'll talk a little bit about U.S. regulatory because it's actually kind of odd. In the U.S., crypto isn't defined really as a security. It's not defined as a commodity. It's defined as property. So it's not actually regulated at the federal level, which means that if you are looking to set up shop in the U.S., you actually just have to register in every state of the union that you plan on doing business in. So companies like Coinbase, like Kraken, they actually register using money remittance license frameworks, as well as in New York, where we're based, we have to get what's called a BIT license. It's just one extra layer on top of the license itself. And that allows you to actually work and take on accounts within the US. Now, on the banking side, that's a completely different challenge because a lot of the banks don't want to touch you. There's a few in the US that are, they're smaller ones. They're not the big names like Chase, like Citigroup, those kinds. And they're a little more flexible to allow, I guess, companies that are registered in a certain way to actually, get onboarded. But it really boils down to this. Look, in the FX industry, this regulatory oversight, it's basically kind of like, from my perspective, more in a holding pattern because we kind of figured out, here are the risks. This is how we introduce risk to clients. This is how we disclose certain things to people. This is how we secure their funds. This is how we segregate things. Very difficult to do in a market that you have no central authority. Very difficult to do. So how do you actually do it? I think this is really where the challenges come in. That's why you have a lot of the central authorities kind of on the sidelines right now, kind of like looking in, see who's really going to make the first step and how they're going to do it the right way. The US is sort of leading the charge a little bit with the way that they've set up the BIT license. I think the jury is still out on whether or not that's going to be effective long term.
Okay. And Alexei, you have been providing technology to a lot of brokers. What are you hearing from them? Are they worried and still not worried?
Yes. Okay. So we have a lot of brokers, and what we see from now, so brokers are really looking for new solutions.
Guys, I'm having a perpetual request from the crowd, A, to speak louder, and B, to put the microphone here. So,
okay.
Thanks.
Okay. So, yeah, we have a lot of brokers, and we see that they're looking for new solutions in terms of regulation. But in my opinion, so I'm visiting such experts for last like 5 years, and I hear the talks about dying of Forex every time. So people say that regulation becomes tougher, so Forex is dying, and what we can do next. But looking at my clients, I see that new of them appears, and we see new brokers who want to continue to work with the new types of business. And as already was mentioned, some big companies go out, but we have new companies on the area, and they will continue the expanding of the markets. Of course, it will be consolidation, as it was already said, because leverage changes will lead to this consolidation for sure. But in my perspective of view, I think that it could be good for market and for clients especially, because Forex is not so very experienced traders. Forex traders not so experienced. So I think that it's time to push them to learn more, to understand how to make a risk strategy of their trading. Because if you have a leverage like 1 to 500, what we could say about risk management of the trading? So it's useless. So I think this kind of regulation will lead to a better market for everyone, because we will see less scandals about big companies like we saw with Ivanfx and other companies as well. So everybody know about these cases. So in my opinion, it could be good. Also, in terms of cryptocurrency, I say yes, we will see a mixing of Forex and cryptocurrencies in Merced. So I really sure that leverage will disappear in some period of time, because in new age of traders, they will go to crypto instead of Forex, I suppose, because crypto is is in a hype right now, and the young generation who will continue to trade in the next year, they will look at crypto. And right now, margin trading for Forex is different from deliverable crypto trading. And I think these markets will be mixing it to each other, and we will see something even new in close future, maybe 2, 3, 5 years.
Well, if we're going to speak about crypto, volatility has been a key driver for that volume to come in. But once we saw volatility dive down, or prices stopped rising, then we saw flatlining in demand and even drastic decline in the past couple of months. So, do you guys think that this crypto hype will go on?
I think one important thing that I wanted to accomplish today in the panel is we're blanketing a lot of things under the term crypto that we're using to cover multiple different concepts. So Bitcoin has existed for a very long period of time. It's actually been a topic of conversation at the Expo for more than just the last 18 months during this hype. But if you walk around the conference today, you see the term crypto also being associated with ICOs. An aspect of this industry that I think is very dangerous. I think the unregulated offering of shares to unqualified, unregistered investors is something that we're going back to the early days of the pink sheets. We're not even talking about FX. We're going into equities market cleanup that's taken decades and decades around the world. Even beyond equity offerings, we're looking at ICOs that are doing things like pre-selling assets and allocation that don't exist. I personally was not a very strong believer in the binary options market, and I'm happy that we've kind of moved on as an industry there. I believe that cryptocurrency is, and the majors of a Ripple, a Bitcoin, an Ethereum, are very exciting things. We should all be encouraged by the fact that we have a new asset class to deal with in the fintech industry, in the world of finance, that is not going to replace FX. It's not going to replace equities. It's a complement that I think for decades into the future we'll be dealing with, we'll be offering to clients, but it's not replacing things. So we look at brokers like I'd look at a friend who is asking me to invest. If you came to me tomorrow and said, Andrew, I never really had much savings, I don't operate a 401k, I don't have a mutual fund or superannuation if you're in Australia, I've just taken all of my savings leveraged on a Visa card and put it all into crypto. Was that a good investment strategy? I'd say no. And I'd say the same thing if your business over the last 18 months, due to a wave of hype on this blanket term called crypto, has reinvented itself, put blockchain at the end of your name, and is attempting to ICO yourself out in exchange for unqualified investors, other cryptocurrency, you probably didn't have a good business or investment strategy before that. But I don't believe it's going to go away. I believe we need to look at this asset class alongside FX. You mentioned let's push clients from FX into something they might understand more. Let's push clients also into DMA equities, into futures. The broker of the future, that this room 5 years from now, this conference 10 years from now, will still exist. I believe it will be diversified multi-asset brokers offering legitimate cryptocurrencies, FX products, CFDs, and also direct market access, DMA, equities, and futures, all in one bundle.
All right. If I may add then about this crypto space, then if I go back like 18 years ago to the .com bubble, then pretty much any guy who opened the website, dog.com, cat.com, potato.com, was suddenly like having 100 million valuation. And at the same time, like if you look today, then 99% of these companies are not around anymore. So when I go to this crypto space and I look all these coins, I think everybody in this room agrees that 5 years from now, 95% of these coins or whatever things they are, they will not be around. So if you look at from the investor's perspective or the trader's perspective, then it's really hard to choose, you know. And most of the traders don't really understand what this product is. And then there is also the risk from the brokerage side. So how can you offer a product to trade for your clients what the client doesn't understand? I mean, what is it?
Right. Well, asthma thinks that clients don't understand the current products very well. So, speaking of which, there are some rumors that firms in the industry are working on products that are compliant with asthma regulations. And any of you guys have heard about such a product being in development which offers higher leverage while being in compliance with the new asthma framework?
So I think like some people are you know, missing this again, that you know, the leverage reduction will be there. It will be globally. So rather than focus your efforts like engineering this products, going around this, you know, going to this shady licensed jurisdictions, just admit that leverage will be 130, 150 down the road. So build their business around this perception, you know. And there are, as Andrew mentioned, there are many other products around there. So if you look at the whole retail FX business in the global trading industry, it's maybe 1-2%. 1-2%. You have 98% other markets, other industries, stocks, futures, options, bonds, you name it. So why you focus on this 1-2% and try to re-engineer these new products to comply with ESMA or whichever regulations?
Well, things happen when the pressure is on. Mike?
Yeah, I echo that. I think anybody that is trying to build a business with longevity, and the way that they're doing it is by simply trying to bypass regulation and set up a product specifically with that in mind, is probably not building something that's sustainable for the long run. I think if you embrace the regulation, if you do it properly, if you invest in good technology, best people, that is how you build a business with longevity and something that is scalable and something that ultimately can help you drive an exit.
I'll echo that again. At some point, if your response to regulation is continuing to flee and play regulatory arbitrage, you'll end up with a brokerage in Antarctica one day selling to penguins. You're going to run out of places to go. And at some point, you have to turn around, face the brunt of regulation, and say, okay, with net capital restrictions, with leverage restrictions, what are my options? And I'll echo again, multi-asset diversity. Put stocks and futures in front of your clients. Give them a more holistic trading experience alongside things like crypto, and start to see what it's like to have investors who you can sit alongside and benefit from their longevity. And then also, you know, with your feet on the ground in that foundation, build a business with confidence that you're not going to have to wait for that next regulatory overhaul and figure out which island off the coast of somewhere has the latest regulatory leverage, lack of restrictions. So the foundation is very strong. I agree with Matt.
Ziv wanted to jump in.
Yeah, just a few comments based on what my fellow said, because very smart things. As far as I see it, crypto or a blockchain technology, and you mentioned it is like the .com revolution. So the blockchain today, this transmission system, how we get the information from one place to another in a secure manner, very fast, without the necessity of someone to build an infrastructure for us, like banks, communication companies, and so on. So we are in just the beginnings of like the internet revolution. We have now it's not cryptocurrency, it's blockchain revolution. The cryptocurrency and the Bitcoin is just the first impact or something to symbolize money and this technology where you put them together. So Bitcoin and Ethereum, I assume, will always be there. In regards to ICOs and what you mentioned in a few words, the binary option world almost, as an industry, almost managed to win the FX completely, almost. The regulators in the past 18 months were strong enough all over the world, as from Canada, Australia, Israel, everywhere, to block it and prohibit it. You see thousands of people, especially in Israel, lost their jobs, closed the offices, and either moved out from Israel or are not doing it anymore. So I mean, we have the possibility from a regulation point of view, if everyone understands that something is not good, to make the right steps all over the world in order to cut it off. I'm really afraid that the crypto trading spaces will become the next binary, and the CFDs, crypto CFD, it might be same, exactly the same, so I personally afraid of that. In terms of ICO, in general, you're right, more than 27% of the ICOs were launched by Wall Street Journal were scams. 30% of any ICO that went was a scam. We have a very good, effective compliance team that we built just for cryptocurrency. So we believe that you can understand whether an ICO has a potential to be successful or not, or to be legit or not. It's starting from reading the white paper to see who are the people. Sometimes we get white paper with people that do not exist. We go Facebook, LinkedIn, they are not exist. So obviously, I mean from banks' point of view, acquirers and corporate bank accounts, the compliance team will have to understand that these companies are a part of us today. There are ICOs. Some of the ICO companies are a part of existing companies, listed companies, regulated. Not everything is scam, not everyone. And some who are not, you have to understand that this is different animal rather than what we are doing today. You have to check it, verify it, to be aware of the technology they're using, who are the people behind it, whether they're capable or not, and so on. Otherwise, I'm really afraid that the beginning stages of this cryptocurrency blockchain industry might damage the real businesses over there and what we can really concede and bring from the blockchain as a technology.
Alexei?
Yeah, I just want to add that if we look at the history, we will see that sometimes every new technology, any new aspect of trading could bring a damage to the market, as you said. But as I think if all the industry together will continue to check each other, I mean, to add new regulation and also keep responsibility of their doing, I think blockchain will bring us a lot of new possibilities. And even, as it was said, not even in the crypto trading, but blockchain could be used in many industries, not only in the financial area. So from my perspective of view, I don't want people to just afraid of blockchain and cryptocurrency. We just need to sit and discuss how we could make it better than it's now. Because yes, right now it's like a wild west, everybody doing what they want and nobody control everyone. So yeah, we have a situation we have. But I suppose in 5 years, when the market will be more stable, cryptocurrency market more stable, we will see many opportunities on that market.
Okay, so, sure.
I agree with your point that there are legitimate ICOs and products being offered through ICO out there. And you mentioned that there, with the proper diligence and framework and people and product research, the mechanism that exists to do that is the diligence and very expensive process that you go through to IPO and offer a security. And in many areas of the world they've created, if you want to sell to individuals, then you go through that process to make sure what you're offering is fair to the uneducated individual. If you want to go a little bit more pie in the sky, if your product's not done yet, there's something called venture capital. It exists for that as well. And there's a framework that allows people with the resources to invest in your idea or product to do so. I don't think, if I was one of those 10% of products that would succeed in an ICO, I would look and say, maybe I can find an upstart exchange, a DGCX, somewhere where I can list and go through diligence and actually do that process rather than rely on a mechanism that essentially bypasses an existing framework for diligence and validation.
So we had a nice trip to Singapore in November, and specifically for one reason, to meet various crypto companies in Singapore. It's becoming like a hub. And what came out of this meeting was that a lot of the guys, these crypto guys, live in completely different world than we are living. So we asked, okay, do you have a license? We don't need a license. Do you have at least like payment services provider some approval? No, we don't have. We don't need it. Which banks are you working with? We don't need the banks. And I mean, it's like they at least at that time, it slightly started to change the last few months. At least at that time, they were under the impression that they can just operate this whole business without and outside of the infrastructure, the banking regulatory infrastructure that is out there. It's not possible. I mean, clients, when they send money, they send from bank account. So if you want to serve them, you need to be regulated. And what we've seen the last few months is that some of these crypto guys are approaching now not only us but other regulated entities to get this know-how, how to manage and operate the regulated business. So there are even some opportunities for some of the guys in this room that if you have a solid license, solid reputation, good capital base, there are some really, really good opportunities in the crypto space to do some joint ventures, cooperation.
Okay, so we have touched on regulation and on cryptocurrencies, and I'm going to move on to payments and ads and the restrictions that Google and the card payment companies have been trying to impose on the industry. What are the thoughts of the panel? Maybe we should start with Ziv because you have a direct line of business there.
Okay, so from payments point of view, I would say both. By the way, the ESMA 2 and Basel 2, everything started since Visa Inc. purchased Visa Europe and imposed the standards, the American standards of Visa and MasterCard to the European Union. The space in the European Union was far from being okay financially, and the Americans made everything simple, everything clear. You have to be registered in your offices, physical, directors. It wasn't like that. Offshore companies in Europe, banking, it was the same as you say, Wild West. So from payments point of view, we saw everything started from Visa, all the changes started from Visa and MasterCard. Two things that we see the biggest challenge today is Visa starting to impose a new rule with no commissions, with no fees or no markups for anyone in the process, meaning the end users will pay for European transaction a fixed fee, around 40 or 50p cents, euro cents, and it leaves no markup for the acquirer and the PSPs in the middle. For the end users, it's great. It's really good. It means no markup on the deal and no However, big organizations like acquirer banks, like PSPs, payment service providers, currently they have to explain why they want this markup. So it's better, by the way, if you see the questionnaire, it's better not to ask for markup from Visa and MasterCard. It's better to do it as is. So from our side, from payment point of view, I don't see this challenge being answered anywhere. And the same amount of work is being done with much lower margins. So I would assume that most of the acquirers either will have different business models such as P2P or car-to-car transfers, or companies like us will go elsewhere, not in Europe, because there is no margin and no logic behind it. For MasterCard, I see a different challenge by the end of the year, same as Google, they decided to be, that they will not allow 6211 transactions, meaning MCC code of financial services. They will not allow financial services to be processed, which is a big thing, or at least all the unregulated companies or uncertified companies like Google. If you don't have a certification from Google, you cannot open your account, you cannot run your campaign, and this certification means also you have to not say several things, like you cannot use the ad money advertisements, for example, or leverage the services, products, and so on. So we see both Visa, MasterCard, Google, which are the main three big brothers in our lives, whether we want it or not, controlling, putting more efforts into the control. And one last point is about the GDPR. the General Data Protection Regulation that's coming in 3 days, it's a part of everything we speak about how the user will feel more confident when he is doing an action online, how the online sphere is good and promoting, but in the other hand, very dangerous. And I think everything we spoke today, including the cryptocurrencies, is a part of where we go to a better place, a more regulated place, a place that the user will know what's happening with his information, with his data, with his money, and so on. It's all the same things that will allow end user to, from his home, to do whatever he wants and to feel secure about it in the end of the day.
So the main message of the panel is just go ahead with the regulatory framework and work on complying in the best possible way so that this industry can continue to exist. And I'm going to ask you though about the unregulated markets. And as Ilimar mentioned, that diversification for companies that are looking to stay afloat is very important. So how difficult is this transition to be able to become to shift from a EU focused business into a globally focused business in order to be able to survive the current consolidation that is, as we mentioned, is going to happen?
So anybody having today 80% of their business in Europe, good luck with that. It's actually going to be very difficult because something that has changed over the last 2-3 years is that when like 4 years ago, some of the markets in Southeast Asia were really new markets. You had very little competition, if at all, there. So today you see all of the big guys already present there. So the competition landscape has changed completely, and you need local partners there. How can you find these local partners? You need to give them some incentives, but then they are already stuck with other brokers that are working there. So what I would possibly do is I would probably do some joint ventures with some brokers that already have a meaningful business outside of Europe. I would most likely look also to regions like South America, parts of Africa, Middle East. There are also some spots in Southeast Asia like Vietnam, Thailand, Indonesia is still good, Malaysia. So some select spots there, but again, you need a very strong capital base to do that. And rather than do it alone, do it with somebody that already has a meaningful presence there. Somebody that, for example, is looking to have in their portfolio a European license. So if you have a European license, they don't have it. They have strong business in Asia. Do something together, you know.
Right. Just be careful that joint ventures don't turn into joint adventures. So I'm sure that anyone from the panel can share one, but maybe we have time for some questions from the audience.
Thank you, Victor. My name is Marcin. I'm from Comparic Group. Wanted to ask Mr. Andrew Relic about his encouraging brokers to go multi-asset, to go to diversify with asset classes. I wanted to ask, because I see brokers are a bit delaying with that or not really keen to do so. Do you think it's related to market data and how 1.0 helps brokers to overcome, let's call it problem? Do you help with relations with exchanges? Do they still have to have their own relations with exchanges to distribute market data?
I think that's a fantastic question. I think we've all done a fantastic job of also not being too self-promoting today. So I won't talk much about what 1.0 is doing there, but your question is very astute and spot on. Spoiler alert, once you start to get into multi-asset, you are going to have to pay for market data. This is very new for us coming from the FX world. This is very new for the new crypto world as well. If you're offering a Brent crude oil price that's derived off the CME today, or single stocks on your platform, and you're not paying for market data, you're playing that same type of regulatory arbitrage that we've been encouraging people to avoid the entire panel. So we've found a number of very strong infrastructure and providers out there. Took us about a year to decouple the concept of quoting and trading in our systems, and we found companies like Active, Morningstar, Bloomberg, Thomson Reuters. There's a very diverse and well-established infrastructure for educating brokers on how to offer multi-asset solutions in a way that is progressive. Some exchanges like CBOE are doing a great job in offering multi-user licenses, but you're going to pay for it. There's a barrier to entry for these solutions. So this has been, we always say, with every challenge also comes an opportunity. We had a fantastic sit down with MetaQuotes this week while visiting Cyprus about bringing some of that market data education into their platform and out to clients. And the solution's not done yet, but it's definitely something that there is infrastructure and there are opportunities for out in the space.
You mean the vendor of record?
Sorry?
You mean the vendor of record?
Yeah, well, I think exchanges are starting to also learn about the retail industry. You know, it's been a bilateral conversation as we've introduced the concept of paying per user for market data, turning back around to CBOE and saying, yeah, Tickmill has 30,000 users. So when you say $10 a user a month to see a depth of market price on a CME traded instrument, that's not going to be viable. So there's middle ground being met by many of these exchanges, and I'm happy to see the progressive approach that they're seeing, because there is a global retail market that is a tremendous opportunity for traditional exchange traded products.
Just to reflect on that, about regulated products, then the business model there is completely different. Like if in the CFD FX business, big portion of the broker's revenue could be coming from market making, and futures, options, stocks, it's a commission-based business. And you have guys there already present that are offering these products at a very, very low commissions.
Yeah, well, it's difficult, but if you provide a client a safe place, just like what we've seen with a lot of brokers, net capital restrictions say, okay, I don't have the resources. I have to match my client funds in Australia now, so I can't put my client's capital at an LP. I might not be able to go to one LP for CFDs, one LP for FX, and then I have a best friend that I do my exotics with. Traders are going to see the same thing. So a retail trader might say, I don't want to open up an account with an equities broker, an FX broker, and the fact that you can offer them the ability to trade an Apple stock or a Lloyd stock alongside a market-made FX product might be the key to bringing them in the door, and then you still generate revenue the way you used to, through traditional FX market making, through new asset classes like crypto, but you still complement their ability to leverage their deposit in one place and agree, hopefully not as a loss lead, but as something that's not going to be as profitable as market making on a 2-pip wide FX product 10 years ago. I think it's changing, but it can still be done in a way that's commercially viable.
You asked earlier about regulated and unregulated projects and businesses. In general, the regulated CySec and FCA, now that approaching outside the Southeast Asia, South America, for sure will stay in the same manners, in the same standards that they are doing today. So regulation, for me, it's a DNA in a company. How you handle, how you deal. It doesn't matter if you work in Malaysia and you have a local regulation, most probably not, or from Cyprus, but how you deal with the client, what you tell him, what advertisement is so, what the sales representative will speak to him. This means regulation and how they are going to do it. It's very hard for an unregulated company that started in a certain place to go through the regulation. There was some cases, but rarely. And if someone wants to start and to be regulated, he has to start from the beginning. Again, it's DNA, how you do it from the first stage. So a broker which is regulated can perform activity in unregulated market in the same standards, but it's very hard to do the journey from an unregulated entity for regulation. It's not in your DNA probably.
So we have time for one more question.
Hello. I'm Larry Levy, write for eForex. I'm also involved in broking, and I also trade as an investor with IG Index, along with 185,000 other people who, many of which have been hit with this regulation. And to put it into perspective from an investor's point of view, it's an absolute disaster. You're going down, I trade the Dow, which is unlike Forex, gone down from 100 to 1 odd to 10 to 1. So we're talking, instead of to trade a pound a point was 120 pounds. From July, it's going to be 1,200 pounds. So rather than helping investors, it's going to force people to actually put more money in, which means maybe in the end they're going to lose more money, or they're going to have to go offshore to non-regulated, which from what I've heard in Cyprus over the last few days, there is a rush for a lot of European regulated brokers to go offshore. So maybe this is a temporary regulation. So maybe what the Forex industry needs to do is to also go back to ESMA and say, you know, perhaps you went a little bit too low on this leverage. Maybe go down from 100 to 50 to 1, which until 2 or 3 years ago was considered quite reasonable. That's what CityFX Pro used to provide. I think they've overdone it. I'm not saying 500 to 1, absolutely crazy. I think we're all agreed on that. You lose your money in 10 seconds. But 10 to 1 or 30 to 1, maybe it's a little too low.
So it's more a comment than a question.
Yes, I'm sorry.
Okay. So let's wrap it up with agree or disagree, unless you have something extremely important to comment about it, because we're a bit tight on schedule. Thank you.
No comment.
I just could say that we have to teach traders, because, you know, if we allow you to trade with 1 to 500, it's not about the risk management of your trade. So most of traders don't understand that. That's why regulation have to push them to trade on lower conditions in this case. So yeah, maybe brokers will start to teach them, and they will realize that this way is better than go to the unregulated broker with a leverage 1 to 1,000 like this.
So our second client, who first signed up with us, he's trading with 1 to 500 leverage. So he was the second client that ever signed up with us. He has been trading all of these years, and he's slightly profitable. He has done, yesterday I checked, 50,000 trades. Okay, clearly he doesn't have a problem with 1 to 500 leverage, but there are some people that, take it not as a trading or investment business, but some sort of entertainment or other stuff. So, but I agree with you that 110 too far, 1,500 maybe too high. So, but I think the regulators have already made up their mind. So there's nothing we can do about this. Yeah, but I mean, if you look at the regulators, they have already made up their mind. They think that this industry is somewhat, evil. We need to put constraints there, etc. And I think what I want to say from like our side, and there are also other brokers present here, like if you take Saxo, CMC, I mean, these guys are solid guys. They treat their clients with respect. IG, for example, they've been around for like ages, Clearly, the regulators should have listened to these guys more, maybe, come up with some compromise. And I actually proposed a compromise six months ago in my blog post. I said that just raise the minimum capital requirement, that you can't start a brokerage company with 125,000, which, by the way, doesn't even buy you a one-bedroom apartment here in Limassol. Imagine you start a brokerage with 100,000. Increase it to 2 million, 4 million, 5 million. You clean the industry, there will be 50 brokers left. and it's easier for the regulator, easier for the clients, and consolidates the industry. You have the solution.
All right. Well, thank you very much for sharing your views. Thank you very much for listening to those. And we're moving on with the
Yes,
schedule.
thank you, Victor. Thank you, all panelists. Put your hands together. I think it was informative. And as Andrew said, they did an exceptional job, not only not promoting themselves, but rather in promoting information and insight, and it's always important.